Dear students, good morning. In the previous class, we have completed capital gain tax. Okay, this is just a practice video, I would say. In this practice video, in this practice question, you will see, inshallah, little bit calculation on income tax and a little bit CGT is there. And I'm going to discuss inheritance tax within that question as well, even though we have not studied inheritance tax right now. So when I'm going to start inheritance tax portion in this video, so it's better you people not watch because you have not studied inheritance tax. But once you have studied inheritance tax, after that definitely you must see that part of inheritance tax as well. But right now, in order to just complete the video, I'll be discussing inheritance tax portion as well. What I'm going to do, I'll be explaining the entire question on this screen, I would say, and after that we are going to solve the question on Excel. Okay, so just let's read the requirement. What it says is a 35 marks question. Prepare the meeting notes requested in the email from your manager. I strongly believe everybody knows that normally you will find requirements in email from your manager. The following marks are available: sale of the business, comparison of the financial implication of the alternative methods for disposing of the business, ignore NIC contribution, thus it gives you 17 marks, and no need to go for NIC. Value added tax will give you 5 marks, we have discussed that already. Inheritance tax will give us 9 marks. Till this video we have not studied inheritance tax, but obviously later on we are going to study, inshallah, and you will be getting 4 professional marks as well. So let's read the question. Ziti, you should assume that today's date is 6 June 2022. Okay, your manager has received a letter from Ziti. Ziti owns and runs an unincorporated business which was given to him by his father Ravi. Extract from the letter, his father has given him a business. Wow, lucky person, I would say. And from an email from your manager are set out below. Extract from the letter from Ziti. Now let's see what Ziti says. I have decided that due to my father's serious illness, I want to be able to look after him on a full-time basis. Accordingly, I'm going to sell my business and use the proceeds to buy a house nearer to where he lives. Wow. My father started the business in 2007 when he purchased the building referred to in the business asset below. He gave the business consisting of goodwill, building and equipment to me on July 18. July 18. Okay. And was submitted a joint election claim for the gift relief such as no capital gain tax was payable. Okay. Have no sources of income other than this. GT does not have any other source of income other than this business. I have identified 2 possible methods of disposal. There are 2 possible methods of disposal. Number 1, my preferred approach would be to close the business down. I would do this by selling the building and equipment on 31st January 2023, at which point I would cease trading. A very important point, students, listen and listen carefully. Look at this in point number 1, what it says. My preferred approach would be close the business down. I would do this by selling the building and equipment. By selling the building and equipment. He's not saying anything relating to the goodwill. Now listen and listen carefully. If you close the business, okay, and then you sell the business, after closing, when we sell the business, so basically what do? Then we sell each asset separately. Once you have closed the business, you will not get anything against the goodwill. If you close the business, then you sell it, then obviously the goodwill becomes 0. You will not be getting any amount against the goodwill. Closing the business and selling means the going concern assumption of the business is now invalid. It's not valid. The business is no more going concern. So you will not be getting anything against the goodwill. We do get consideration against the goodwill when and only when we are selling the asset, we are selling the business with a valid going concern assumption. That is why, dear students, you can see in point number 1, he's not saying anything against the goodwill, because once you close the business, then you sell it, you will not get anything related for goodwill. Point 2, my father would like to see the business to carry on after I sell. For this is to occur, I would have to continue trading until 30th April 2023. Okay, look at this one more thing. If he sees the business and sell it on January 2023, this falls in the tax year 20 to 23. If he continues the business till 30th April 2023, this date falls in the tax year 23-24. Then sell the business to my cousin who would continue to operate it. Now, point number 2, he's going to sell the business with the valid going concern assumption. In point number 2, when he is going to sell the business with the valid going concern assumption, then he is going to get the consideration against goodwill as well. So in point number 2, we are going to get the consideration against the goodwill, and that goodwill will result in capital gain as well. But in point number 1, there is nothing called goodwill, because once you close the business, then your business does not have any goodwill. In each case, I would prepare accounts for the year ended 30th April 2022, then to the date of cessation or disposal. First, he is going to make the accounts till 30th April 2022. This falls in the tax year 22-23. And after 30th April 22, he is going to make the accounts to the date of cessation or disposal. I attach an appendix setting out the information you requested in relation to the business. Sadly, I have been told that my father is unlikely to live for more than 3 years. Please let me know whether his death would result in an inheritance tax liability for me in respect of the gift of the business. Yes, why not? My father's only lifetime gift, apart from the business, given to me was the quoted shares to a discretionary trust, that is CLT, on 1st May 2014. The shares had a market value 190 at the date of gift and did not qualify for a BPR. The business property relief was not available. Okay. But dear student, please do not get, I would say, there's no need to put off when I'm discussing inheritance tax, because you have not studied inheritance tax till here. But very soon, inshallah, we will study inheritance tax. Since I want to discuss the entire question, that is why I'm discussing the inheritance part as well. Appendix. Business asset, all figures excluding VAT. Original cost of business. Market value at the time of my father's gift on July 18. Goodwill had a market value 40,000. Building had a market value 300,000. Cost was 60. Equipment had a market value 9,000. The cost was 18. Expected market value as at 31st January and 30th April 2023. Goodwill 40. Goodwill had an original cost 0. Building 330. Equipment 10,000. Okay. Financial position of the business. The tax adjusted trading profit for the year ended 30th April 2021 were 55,000. Okay. From 1st May 2021, it can be assumed that business generates trading profit of 5,000 per month. The only tax adjustment required to this figure in respect of capital allowances. We just need to perform tax capital allowance adjustment. That apart from capital allowances, everything is already done in this 5,000. The tax return on value of the main pool at 30th April 2021 was nil. I purchased business equipment for 6,000 on August 2021. Okay. There have been no disposal of equipment since 30th April. So on this business equipment of 6,000, you will be getting annual investment allowance 100%. And this 1st August 2021 falls in the tax year 21-22. And he's not selling, he's not seizing the business. in the tax year 21-22. Since he's not ceasing, he's not selling the business in the tax year 21-22, that is why annual investment allowance is available. Otherwise, uh, in the last year of the business, when you are selling a business or when you are seizing the business, you never get annual investment allowance, you never get even capital allowance, you never get first year allowance. In fact, in the last year, you will be getting either balancing charge or balancing allowance. If you are having balancing charge, it will increase your taxable profit. If you are having balancing allowance, it will reduce your taxable profit. But they will arise in the last year of the business. But since August 2021 falls in the tax year 21-22, and he's not selling the business, not seizing the business in the 21-22, that is why annual investment allowance of 6,000 is available. Extract from an email from your manager. Additional background information. Ziti and Ravi are both resident and domicile in the UK. Whoever is resident and domicile in the UK, that person will have to pay income tax on his worldwide income. Ziti has overlap profits from when he took over the business, 9,000. Okay. All of the equipment is movable and no item cost or market value more than 6,000. Okay. If we have the equipment which are having cost or market value less than equal to 6,000, then that is exempt. You will not be getting any capital allowance on that 6,000 amount. The business, this is only for all of the equipment is movable and no item has cost more than, they're talking about the equipment. Okay. Cost and market value more than 6,000 pounds. The business is registered for VAT. If you are having equipment, number one, they are movable, not having cost or market value more than 6,000. So that particular equipment actually will not result in capital gain. It is actually exempt from capital gain. So exempt from capital gain. We have studied such thing in the topic called chattels. No election has been made in respect of the building in relation to VAT. No election has been made in the topic VAT, value added tax. We did discuss if there is a commercial building which is having an age more than 3 years and you are selling it, it is an exempt supply until unless you opt to tax. Since they have made no election, so let's say if there is no election, you are not opting to tax, so it is treated as an exempt supply. Please prepare notes which we can use in the meeting with Ziti, which address the following issues. Sale of the business. Calculation to enable Ziti to compare the financial implication of the two possible methods of disposal. You will need to calculate Ziti's taxable trading profit from 1st May 2021 onwards and income tax thereon, any capital gain tax, CGT as well. You should include explanation of the availability of any CGT relief. Dear student, while solving the question, I'll be explaining as well, but I really want you people to write that explanation in your words, otherwise video will become really long, which I don't want. Which I don't want the lecture to become very long. A summary of the post-tax cash position and necessary assumptions. Explanation of whether or not VAT would need to be charged either on both alternative disposals. Okay, for inheritance, what it says, calculation of the amount of inheritance tax which would be payable by ZT for all possible dates of his father between 7 June 2022 till 30th June 2025. You should include an explanation of availability of any inheritance tax relief as well. When calculating these potential inheritance tax liabilities, you should assume that ZT will sell the business on this date. Okay. The best way for you to approach this to identify the particular dates on which inheritance tax liability will be charged. Actually, what happens when donor dies within 3 years of making the gift, then you will not be getting any taper relief. But the donor dies after 3 years of making the gift, then individual gets taper relief as well. So we'll be discussing this later on. Let me first discuss and solve the entire part other than the inheritance. And after that, we'll go to inheritance as well. We have to sell the business. Actually, there are two options. One is to seize the business on 31st January 2023, and the second is to sell the business on 30th April 2023. Now, let me tell you one thing. Now, students, please listen and listen carefully. First, he has to make accounts till 30th April 22. Okay. After that, if he sells the business on 31st January 2023, now listen and listen carefully. This date falls in the tax year 22-23, and this date also falls in the tax year 22-23. So when two tax years, when the last tax year in which business is seized or maybe sold, that accounting end and the previous accounting end, when both fall in the same tax year, we merge both of them. We are going to merge profit of these two accounting ends, and we will be deducting overlapping profit. So if Ziti sees the business on 31st January 2023, then logically two accounting ends will fall in the same tax year. When two accounting ends they fall in the same tax year, I'm going to merge profit of these two accounting ends, and I'm going to deduct overlapping profit. So let's try. But in another part, when he's going to sell the business on 30th April 2023, then this accounting end and the previous accounting end both will not fall in the same tax year. So obviously I will not merge the profit of these two. But in case one, when when GT is going to seize the business on 31st January 23, then we have to merge the profits. So let us solve this on Excel. Before this question, we have already solved few questions on Excel as well. And I'll do one more thing very soon. Some of the question of ATX I'm going to solve on ACCA platform as well, so that you should be getting the exact simulation which you are going to face. That will give you the exact simulation of the scenario which you are going to face in your exam. But let us solve first this question on Excel. I have read the complete question and I have discussed the complete question with you, dear students. Okay, that is question 100 in my book. It's a 35 marks question. We have to make notes for the meeting. So no need to take tension. Just give the heading notes for meeting. Prepared by, you will be the tax senior. Prepared by, let me make you tax senior. What do you say? Yes, sir. So you should feel a little bit good. Date is all. In question 1, 35 marks question, your examiner will definitely give you the date. The question starts from the date. If you check, date was given, you should be having a question in front of you, otherwise it becomes 6 June 2022. That's the date which is given to us. Subject is very simple. Multiple tax issues of Ziti. Multiple tax issues of Ziti. First, we are solving for the sale of the business. Post-tax income. We need to calculate post-tax income. and sales proceeds. Okay. In part 1, we are seizing the business on 31st January 2023. Business is seized. Business is seized on 31st January 2023. Okay. We have to make first accounts till 30th April 2022. 30th April 2022. Then we have period end. Because from 1st May 2022 till 31st January 2023, we have 9 months. So period ended 31st 1 23. Trading profit. Trading profit. Actually, it is given in the question. We have a trading profit 5,000 per month. 5,000 per month. Over here, I'll take 5,000 into 9. We will be getting annual investment allowance for the 6,000. So let me deduct. Because on, I think, August 2021, Ziti bought equipment for 6,000. Let me deduct capital. Let me write, that is actually, we are getting AIA. Annual invest, we are getting annual investment allowance, bracket close. So 100% annual investment allowance is available. Now, after that, what is happening? Look at this, dear student. After that, on 31st January 2023, on April also, market value has been given. Definitely, goodwill has nothing to do because when we are seizing the business, so we will not get anything against the goodwill. But look at this equipment. Equipment is having a market value 6,000. A very important point. When I'm going to sell this equipment for market value 10,000, logically I will be having tax written down. I'll be having tax written down value 0. Because in the last accounting period, I bought the equipment for 6,000. On that equipment, I got the annual investment allowance of 6,000, which means that written down value of the equipment in the main pool is 0, and I'm going to sell it for 10,000. So it will result in balancing charge, and logically the balancing charge will increase. Balancing charge will increase my trading profit. Balancing charge will increase my trading profit. So simply I'm going to add balancing charge. If you want to show this calculation in the bracket, you can do that. Let me show you. Tax written down value, you can say 0 and minus 10,000. Definitely it will result in balancing charge. So here comes your tax adjusted trading profits. Tax adjusted trading profits. We have 54,000 and 55,000. Since both the accounting ends, they are falling in the same tax year. So obviously I'm going to merge these profits and deduct the overlapping profit. Okay. Which is 22/23. So what I'm doing, look at this. I'll take this plus this. Because both are falling in the same tax year. And let me deduct overlapping profit. Less overlapping profit in the question, dear student, 9,000 is given. Okay. So here comes your taxable trading profit. Taxable trading profit is going to be just 1 lakh. So dear student, taxable trading profit is 1 lakh. Now let us calculate income tax on this taxable trading profit. Obviously I have to deduct personal allowance less personal allowance. In Finance Act 2021, personal allowance is 12570. I'll get taxable income. Let's see what is the taxable income amount. Taxable income is 87,430. Basic rate band is having a limit of 37,700. Let us calculate income tax now. Basic rate band limit is 37,700. The rate is 20%. Okay. From 87,430, I'm going to deduct this 37,700. So 49,730 actually falls in higher rate band, where the applicable tax rate is 40%. So let's apply this. So my income tax liability, if I add both of these, my income tax liability is 27,432. This is my income tax liability. This is my income tax liability, 27,432. Another way of selling the business is that Ziti will continue the business till 30th April 2023. Then sell it. Okay. So business is sold on 30th April 2023. Year ended 30th April 2022, and we will take year ended 30th April 2023. Correction. Okay. This time both the accounting ends, they are not falling in the same tax year. So trading profit 5,000 into 12, same here. Let us deduct capital allowance. That is basically we'll be getting AIA, annual investment allowance 6,000, 0. Then balancing charge in the last accounting period. Balancing charge, which is 10,000. So simply we'll get the tax adjusted trading profit. Tax adjusted trading profits. Now we have to calculate income tax separately for 30th April 2022 and 30th April 2023 because both accounting ends are not falling in the same tax year. So we need to calculate tax separately. And overlapping profit will be deducted from the last profit, and the last profit is not 54,000, the last profit is 70. So let us deduct. Overlapping profit, which is 9,000. So taxable profit is 54, and over here, hmm, hmm, taxable profit is 61,000. Simply let us deduct personal allowance to get taxable income. Personal allowance. Personal allowance is 12570. Obviously the same thing. So I'll be getting taxable income. Taxable income is this. Taxable income. Great. So let us now simply calculate income tax separately. We have to calculate for the tax year 22, 23 and 23, 24 separately. So let's calculate income tax. Basic rate band is having a limit of 37,700. Applicable tax rate is 20%. So here comes, let's see what is the answer. Great. From 41,430, I will deduct 37,700. 40% of this. That is 1492. So income tax liability for the tax year 22-23 is going to be income tax liability for tax year 22-23. Simply add both of these. So here comes your income tax liability, which is 9032. Now let's apply these thing here. Basic rate band. Let me take this figure. Oh no. No. Let's do this. What I'm doing, I'll show you. 20%. Let's see what I'm doing. From 48,430, I will deduct 37,700. Applicable tax rate is going to be 40%, and which means let's see what is the amount. Now tax here, I would say tax here 23, 24. Your income tax liability is, that's great amount. Hmm. Look at this. This date actually falls in the tax year 23, 24. This falls in 22, 23. So we have calculated separately income tax liabilities. In both the cases we have computed. The one was when business was seized on 31st January, and the second was when business was continued till 30th April and it was sold to a cousin. Now let us try to calculate capital gain tax in both the cases, case 1 and case 2. Now listen and listen carefully. In case 1, I'm just explaining you on this screen, then I'll go to the Excel. In case 1, obviously Ziti will not get anything about goodwill, but look at the building. When Ziti got this building, it had a market value 300,000. It costed his father 60,000. So there was a capital gain of 240. And it is written in the question they have claimed the gift relief. Claiming the gift relief means father did not pay any tax and the base cost for the ZT was 60,000. Because father got the gift relief of 2,40,000 and there was a gain of 2,40,000. So which means that base cost for ZT is 60,000. And now ZT is selling this building for 330. From this 330, I'm going to deduct base cost of 60,000. So definitely I'm going to have capital gain. But a very important point is from 330, I'm going to deduct the base cost 60,000. How did I get this 60? Father bought this building for 60,000 when father gave gift to his son. At that time, building had a market value of 300,000. From 300,000, if we deduct 60, so it means that at the time of gift, that building resulted in a capital gain of 2,40,000 due to gift relief, which is written in the question. Obviously, no tax was paid, so entire 240 was taken as gift relief. And while calculating base cost for ZT, obviously we will deduct that gift relief from 300,000. Okay. What about the equipment? Actually, it is written in the question. Equipments are not equipments which were in the actually main pool. For equipment, it is written in the question. They are having cost and market value not more than 6,000. So simply they are exempt from CGT. So equipment will not result in any capital gain. And definitely goodwill cannot come in case 1. Because in case 1, ZT has seized the business. So let's try to calculate capital gain tax. Capital gain tax. When business is seized on 31st Jan 2023. For building, sale proceeds of building. Sale proceed of building is 3,30,000. From this 330, I'm going to deduct the base cost. Base cost for ZT. That is 60,000. From where I'm getting this 60, let me explain you that also. Uh, Equipment exempt from capital gain. Equipment exempt from capital gain. having cost and market value not more than 6,000. Okay. So simply we'll have chargeable gain. From 330, I will deduct this 60,000. Chargeable gain is 2,70,000. From this, I will deduct annual exempt amount. Annual exempt amount, which is 12,300, which is same in both the Finance Act. Finance Act in 2020 and 21, it is same annual exempt amount. It gives us taxable gain. Taxable gain is this, and definitely this taxable gain qualifies for better. Why it is qualifying for better? Because ownership period of the business is obviously more than 2 years, and it qualifies for better. So which means that due to qualifying for better, CGT rate is 10%. Due to qualifying for better, CGT rate is 10%. We have to take 10% of this. Okay, let me show you how did I get this base cost for Ziti. Let's show working here. We can show working where. Let's base cost of building for Ziti. Market value at gift date. Market value on gift date was 300,000, and definitely the gift relief was 240. Just deduct gift relief minus 60,000. Oh no, oh no, no. Let me do the correction. $240. So here comes the base cost. Let us show working one, reference to of working one. That's simply great. Okay, if ZT continues this business till 30th April 2023 and then sell it to his cousin, in that case, obviously the CGT 25770 will remain same, but one more CGT will come on goodwill, because when you are selling the business with a valid going concern assumption, then obviously you will be getting the amount against the goodwill as well. And since the goodwill is having the cost 0, so entire 40,000, the market value of the goodwill will result in capital gain. On that capital gain, obviously we have to pay 10% CGT as well, due to obviously better. So let's try sale of the business on 30th April 2023. We will get CGT this. Simply will add CGT on goodwill. The amount of the goodwill is obviously 40,000, that is the capital gain, 10% of this. So total CGT will be 29,770. Badder will be available in both the cases. Badder will be available in both the cases, because when you seize the business, then you have to sell the business within 3 years of cessation, which is obviously Ziti is doing, and or otherwise you have just sold the business which you have carried for at least 2 years. So in both the situation, Badder is available. Now let us see the financial position. Either Ziti should go for seizing the business and then selling it on 31st January 2023, or to continue the business till 30th April 2023. Let's see which option is financially better for Ziti. Let's calculate post-tax cash position. Post-tax cash position. Sale on 31st January 2023, and the second is sale on 30th April 2023. We will take trading profit. Trading profit, trading profit. Now I will take this entire trading profit over here. Trading profit of going to be this plus this. We will deduct. Actually, in post-tax position, you have to just take cash inflows and outflows. In post-tax cash position, dear students, you have to just take cash inflows and outflows. That's it. So just deduct less purchase equipment. On 1st August, it was purchased. $2,021. So which resulted in a cash outflow of 6,000 obviously. Okay, now take the sale proceeds. Goodwill. When I'm seizing the business and selling it, so obviously I will not get anything for, against the goodwill, but here I am getting 40,000. Building, both the cases I'll be getting 330. Building, we are getting 330 in both the cases. Equipment, we are getting 10,000 in both the cases. In both the cases, we are getting 10,000. Now let us deduct income tax. Let us see what was income tax. It's this. Let's calculate here. We got two income taxes amount, if I'm not wrong. I got 9032 minus this. So we're getting 20864. Let us see. CGT payable. CGT payable. This is 25,770, and in this case we have 29,770. I strongly believe all the cash inflows and outflows are here. So here comes your final answer. Post tax position, you can just apply some formula. Let's apply some formula here also. That's great. So it can be seen financially. It is better to delay the sale until 30th April 2023. So definitely is better. So simply just let me write one thing. Oh no, it is better for Ziti to sell the business on 30th April 2023. Definitely it is better. Okay, now what else we have? Let us see for VAT. What is examiner asking for the VAT? Dear student, I'm not going to draft the answer for the VAT, but I'll explain you. But I want you to write in your words in order to save the time. Okay, value added tax, value added tax. What they want us? Okay, the business registered for VAT. No election has been made. Okay, let me tell you. For VAT, what you have to write? In case of seizing the business and selling out on 31st January 2023, dear student, first you have to write that VAT will need to be charged 20% obviously on equipment. And second point you have to write, since the commercial building is having age more than 3 years, so it is an exempt supply. Simple. If he's seizing the business selling on 31st January 2023, then on equipment 20% VAT will be applied, and for building, due to having age more commercial building having age more than 3 years, it is an exempt supply. Then you will be putting the heading sale on 30th April 2023. If ZT sells the business on 30th April 2023, obviously number one, he's going to apply 20% VAT on equipment as well as goodwill. Okay. And for building, obviously you will just write one thing. In case of building, uh, you just need to write one thing, since it's a commercial building having age more than 3 years. So it is exempt supply until unless opt to tax. ZT opts to tax. Okay. But in case of equipment and goodwill, if ZT does not want to apply 20%, does not want to pay 20% VAT, it is also possible, provided that business is sold or business is transferred as going concern. If the condition of going concern are met, then there will be no 20% VAT on equipment and goodwill. So what are the conditions for the business to be transferred on going concern? Simply, the buyer will carry out the same business which ZT was running. Second, there will be no significant breaks, and purchaser must be VAT registered. So these are the few conditions. If, dear student, you don't remember the conditions of VAT when we are selling a business and going concern assumption is valid, then there will be no taxable supplies. you can learn these conditions from the VAT chapter, which we have already discussed. Okay, now my students, obviously, you have not studied inheritance tax. I'm solving the inheritance tax part, okay, but all of you, please, there's no need to watch that inheritance part right now because you have not studied inheritance tax. But I'm solving it just for the sake of completing the question, so that at least we should complete the question. But you people should not watch from here onwards until unless you have done uh, inheritance tax portion. Let me now read, and I'm solving it for inheritance tax now. Inheritance gives us 9 marks. Calculation of the amount of inheritance tax which would be payable by Ziti for all possible dates of his father death between 7th June 2022 till 30th June 2025. Okay. You should include an explanation of availability of any inheritance tax relief. When calculating these potential inheritance relief, you should assume that Ziti will sell the business on 30th April 2023. Okay. The best way you to approach this to identify the particular dates on which inheritance tax liability will be charged. Now listen carefully. Let me solve this for inheritance tax. Those of you who obviously you have not done inheritance, no need to watch the video from here onwards. After completing inheritance tax, you can obviously more than welcome to watch the video for inheritance tax. Oh no. What is this? Okay. For inheritance, what I'm doing, what I have to do. Okay, let me try. Since father has given entire business to ZTS gift, in inheritance tax, what happens? 100% BPR was available. Now, listen and listen carefully. At the time of the death of Ravi, if ZT still owns the building, then there will be no inheritance tax due to 100% availability of business property relief, BPR. So we are solving for IHT. If Ravi were to die and ZT still holds business, then due to 100% BPR, no IHT arises. Okay, but if ZT does not hold the business, then definitely BPR will arise. If ZT does not hold the business at the death of Ravi, then IHT will arise. Then IHT will definitely arise. Okay, now let's see. Now let us calculate IHT. Obviously, when father gave that business to ZT, at that time it was PAT, but now we have to calculate the death tax. If within 7 years of making that PAT, Ravi dies. Okay, so let's try to calculate death tax. If Ravi dies within 7 years of making the PAT. value of transfer. 40,000 is for goodwill. 300,000 at the time of gift. Building. Equipment is 9,000 at the time of gift. And at the during the life, annual exempt amount was available in the tax year 17, 18 and 18, 19. Because father gave entire business as gift to Ziti in the tax year 1890. Okay, annual exempt amount in tax year 1819 and previous is 1718. You get 3,000 every year. We get 3,000 for the current year and we get 3,000 for the previous year if last year annual exempt amount was not used. Okay. So here comes the gross chargeable amount. The gross chargeable amount is 349 plus this. Entire 343 is not taxable. We have to check for the nil rate band. Nil rate band is 3,25,000. 325. From this 325, I have to deduct last 7-year gross CLT, which is given in the question, less last 7 years gross CLT prior to gift, which is basically 1,90,000, but from that 190 I have to deduct 6,000 annual exemption, which is 190 minus 6,000, 184. So 184, which means that how much? So I'm getting 1,41,000. Still nil rate band is available. From 3,43,000, I will deduct 1,41,000. I will get taxable amount. So taxable amount is 202,000. Inheritance tax is 40% on death tax. So this is the taxable amount. Taxable amount is this. IST is 40%. IST is 40%. IST payable is at the rate. IST payable is at 40%. So IST payable is 40%. Okay, now if simply Ziti dies within 3 years of making the gift, then obviously taper relief is not available. But we are just assuming if Ziti dies within 4 to 5 years, then taper relief 40% will be available. Obviously, these are all assumptions. Assuming Ziti dies within 4 years of making the gift, so there will be within 4 to 5 years of making the gift, so taper relief will be available 40%. Less taper relief 4 to 5 years. Taper relief is 40%. We have to take 40% of this. So IST will be reduced due to taper relief. So 48,480 is inherent as tax. IST payable. IST payable. Okay, now if ZT dies within 5 to 6 years, then IST, if ZT dies within 5 to 6 years, then taper relief is going to be 60%. Getting taper relief 60% means IST will payable will be 40% only. If ZT dies within 6 to 7 years, then taper relief will be 80%. Getting taper relief 80% means IST liability will be only 20%. So we can do that. Just a minute. If not ZT, Ravi. If Ravi dies within 5 to 6 years of gift, then taper relief is 60%. So IST is only 40%. Look at this. IST payable. I will take I will take 40% of this. Okay. If Ravi dies within 6 to 7 years, then obviously taper relief is 80%, so IST payable is only 20%. If Ravi dies six to 7 years, taper relief will be 80% and IST will be 20%. Okay, so IST payable will take 20% of this amount. Obviously, if ZT Ravi dies after 7 years, so there will be no IST. So, dear student, that is all about ZT question. I have tried my best to first explain the question on the screen. Then after that, what I did, I completely solved this question on Excel. So I will do one thing. I'll ask my IT team to upload this Excel file as well, only for relating to this question. So this question is, this video is for both ATX Urdu as well as English. For both the students, this video is made. So just I would say thank you very much for watching this lecture. After this, what I'm going to do, I'll be doing one more practice question, because after capital gain tax, I'm going to discuss tax reducer, a very small topic, and after logically we are left with three topics. One is tax reducer, second is inheritance tax, and the last one is corporation tax. And I believe that tax reducer will not take much time, definitely. So I will try to complete the course as soon as possible with a lot of practice. So thank you very much for watching this lecture. Thanks a lot. Assalamu alaikum.